Hey, it's Jack. Tuesday. And look, the market is really starting to get more bullish. And it's been really good across the board. But one of the things that's been great is covered calls right now. Right? Just amazing how much call buying is going on. And if you own a stock, you have at least 100 shares of that stock, then you can sell one call. Now, what makes for a good stock that has covered calls? Has to have two things going for it. Has to have directional bias, which has to be trending higher. And it has to have volatility. It has to have volatility because otherwise there won't be any juice in the options. So how do you measure volatility? It's measured by beta. A beta of 1 is what the broad stock market has. A stock that has a beta over 1 is going to be more volatile than the broad market. So you want that combination. Directional bias to the upside in this case, volatility. Now, one of the biggest obstacles to the covered call is buying that first 100 shares, right? Now, if the stock is 250 bucks, right, it's going to be a problem. If the stock is, under $100, that's going to be a lot more affordable, right? So here's two that you can really make some good, nice cash flow with the covered call. Okay, I'm doing it. Hood, HOOD. It's under 100 bucks. It's got a great trend, great beta. And IBIT, Bitcoin ETF. Those two, they're poised. They're looking good. Even if you can't get 100 shares, if you want to look for a quick trade, I think those two are primed right now. But the covered call is awesome. So what you do is, once you got your 100 shares, you select a strike price that's, let's say, 10% higher than your purchase price, okay? And that's one of the biggest things is how do you pick the expiration and how do you pick a strike? Well, you pick the strike 10% higher than your purchase price. That way, if you get called out at that strike, you just made an extra 10% plus the premium from selling the call. All right, so start there. And then as far as expiration goes, look 30 to 40 days out roughly, so you could do it 11 to 12 times a year. That's cash flow heaven, baby.